Thank God it's Friday. Time to do 55 minutes of business for the 5th time this week. And here's what we have prepared for you. Ghana now ranks as the second in global IMF concessional lending debt. Morocco is reaping the benefit of its tax amnesty. Now it's reaped about $12.4 billion. And a 10% drop in the price of LPG in Zimbabwe, making it easier for Zimbabweans. Good afternoon, everyone. I'm Imi John Mekwa. We start from the global space to do this business. Global prices hovered near a 4-week high on Friday, poised for their best week since mid-November as investors await U.S. jobs data to gauge how aggressively the Federal Reserve might cut interest rate. Look at the numbers for this afternoon. It's still at $77.16 after it gained 0.3%. WTI, $74.18 a barrel. And now we move over to to the metals space. That was supposed to be for the oil and not the metals. So for the metal space, gold prices hover near a 4-week high on Friday, poised for their best week since. And then we see the numbers. Spot gold is up 0.1% at $2,672.64, while U.S. gold futures went up also 0.2% at $2,696.13. Investors are obviously waiting for that non-farm payrolls that's expected to increase by 160,000 in December, following a jump of 227,000 in November. And spot silver is up 0.4%, $30.24 per ounce. Platinum dropped 0.1% to $957.43. Palladium added 1.4% to $939.13. All three metals are headed for weekly gains. And we already told you about oil. That's what we told you earlier, that in early Asian trade, it was on track for a 3rd straight week of gains, which icy conditions is what it's called in United States and Europe has contributed to increasing demand for oil. Now back here in Nigeria, the inclusion of food production, services and energy indexes in the monthly release by the National Bureau of Statistics is a positive move, according to the Group Chief Executive Officer of Cowrie Asset Management Limited, Mr. Johnson Chukwu. Mr. Chukwu believes that rebasing to capture these new recognized sectors will improve Nigeria's status, especially if it's devoid of political influence. He was a guest on Business Morning earlier today.
Energy sector, because it was never treated as a separate item. Remember that almost everything that runs on earth runs on energy. Everything, not almost everything, everything that is active runs on energy, be it animate or inanimate objects. If you look at the energy sector, starting from supply of liquid energy sources, fuel, diesel, base oil, and all the rest, to electric energy, and you need to be able to measure what size of energy are we generating as a country, which is what the statistical report will show. What's energy? We talk of, okay, sometimes we say, look, we are still on 3,000 megawatts or 4,000 megawatts, but then what is the level of energy that even households are generating from our personal computers, from what we call pass my neighbor, our personal generators, the office generators, the apartment neighbor generator, the industrial generators. By the time we sum up that, we look at what size of energy are we generating and what are the cost of those energy generations and what is the optimal energy need of the country. How do we make sure we're generating energy in the most efficient manner at the cheapest possible cost so that the economy become competitive?
Well, let's look at that and other macroeconomic issues with Olajide Oyadeyi. He's a macroeconomist and joins us virtually from Lagos. Mr. Oyadeyi, good afternoon, and thank you so much for your time.
Good afternoon. Thank you for having me, Ini.
Good to have you. So I wonder what your thoughts are on this rebasing of the GDP and the CPI, especially around the issues of a fear of political interference in the well, accumulation of this data.
Thank you very much, Ini. In terms of the GDP rebasing and CPI, I think from time to time, it is very important that every economy review its GDP numbers as well as the weight of items that are inputted inside the consumption basket for the value of the goods and services that are being produced in the economy. Also for the CPI as well, it's also important that the weight of the consumption basket is being reviewed from time to time, usually around 5 years. So I think the conversation around this today is quite important, because if you look at the last time that this was done, I think that was in 2014, which is roughly 10 years. So I'll say we're about 5 years back in terms of checking what we have for our, the consumption basket for our inflation numbers, as well as the GDP numbers as well.
All right. While we look forward to that, another thing that I guess we would like to correct in the year 2025 is the exit of companies and shutdown of others in the country. So in 2011, Nigeria had its best days where foreign direct investment hit 8.4 billion. That's, as even up till now, been termed the best, be an all-time high. In the same year, we had 2.9% drop in inflation, 414.5 billion GDP, and 13% increase from 360. So talking about the GDP. So I know that a major concern for a lot of companies that changed their mode of operation, left the country, or got shut down, had to do with the FX. We've seen a bit of stability, a relative stability in the value of the naira in the last 1 month, past 1 month. Would you say that we can escape this wave of exits in 2025?
Yes, technically, definitely. I would say that some of the reforms that the government has been putting forward in the last 1 year, a year plus, we're beginning to see some of the effects of some of these reforms. So technically, I expect that not just in 2025, but even in 2024, the last quarter of 2024, I also expect that capital importation, particularly foreign direct investment, is going to increase. If you look at what we have on capital importation, you would see that it's a bit over the last 10, 15 years, like you mentioned, particularly between 2011 and 2015, 2013 and 2014, particularly being the sweet spots, because of that was the period where Nigeria was able to achieve macro stability, where inflation was very low, GDP growth was very sustainable, the current account balance were in its positive territory, and you could see that the macro stability index for the Nigerian economy was quite stable during the period. However, now, particularly since after the COVID-19 pandemic happened, you would see that capital importation in Nigeria has been particularly very low. And this changed quite a bit recently in 2024, because again, the federal government have been able to put down some of the reforms that they wanted to achieve in 2024, while the central bank has also ensured that some of its policies are also in sync with what the federal government is trying to do. So what you could see there was that a bit of stability in Q1 2020, a bit of increase in terms of capital importation numbers, particularly in Q1 and Q2 2024. But something we're beginning to see in Q3 is a shift from capital importation. Before now, you realize that FDIs and other investments have been typically the biggest of investments in Nigeria up until Q2 2024. But what we had, there was a bit of shift in the third quarter of 2024, where you could realize that where we've seen that FDI has begun to increase, even though it's very small. But when something increases from about roughly 1.15% as a percentage of total capital importation to about 8.72% in Q4, and also bearing the fact that none of these foreign direct investments were done in the oil and gas sector, which is one of the 6 biggest sectors in the Nigerian economy. And as well, none of this was also done in the telecom sector, which has a lot of potential for growth due to a lot of developments and innovations coming in through AI and the likes. You then get to see that in Q4 2024, FDI is going to increase drastically beyond what it is. Then also feeding into 2025, I also have that strong positive outlook for foreign direct investment in Nigeria due to some of these policy reforms that we've seen so far.
Interesting, interesting. I mean, when you say a drastic positive outlook, I wonder what that means. Does it look up to 100%? Is it a 50%? Or where do you place it when you say it's drastic?
Okay, not necessarily 100%, but again, when we look at what we are doing, let me take it a bit further. In Q2 of 2024, FDI investment was roughly about $29.83 million in Nigeria, but this improved drastically to about $183 million. So if you look at that, that is already above 100%. And again, there are several other potentials as well, because if you look at the banking industry, there's a lot of conversation as regards recapitalization. If you look at the telecoms industry, you could see what is going on in terms of advanced development in the industry, particularly ICT, fintech, and the rest of them. So you could see that there are a lot of potentials for foreign investors to come into the economy. But again, there are several risks which I know I haven't mentioned earlier. So if the economy can guide against some of these risks, then it's possible for us to see a much more increase in foreign direct investments. But again, in terms
perhaps you could tell us the sectors of interest, and then you can also mention those risks.
Okay, from the top of my head, I would like to say that Nigeria has about 46 sectors. Sometimes when you trickle them down, you talk about 19 sectors. But from these 46, 10 of them are the biggest sectors, one of which includes agriculture, real estate, finance and insurance, telecoms, and manufacturing sector, oil and gas, and the rest of them. So if I am to think about FDI that can actually drive Nigerian growth sustainably, I would want to focus on the 10 biggest sectors of the Nigerian economy. The reason being that these sectors contribute roughly 90% to economic activities in Nigeria. And again, what I'll be targeting from the policy side or from the government side is, it's not about just having that growth. It's about making sure that some of these sectors are fast growing. And what do I mean by fast growing? They grow above 3% each on the quarter-on-quarter basis. Now, if this happens, this has a reason to feed into sustainable development of these sectors, because we definitely know if the capital comes into Nigeria, some of the unemployment rates we are seeing will definitely reduce. Then it also has the potential to increase the demand of goods and services from households and consumers. Then as well, if that happens, then you will expect that GDP per capita and some of the other macro metrics that we use to measure like final household consumption expenditure and the likes is going to increase. That's on one side of it. Then the other side of it, which I strongly believe, is the aspect of household, the aspect of competition again. So when FDI comes in, it makes existing firms become more competitive in the economy, and competition breeds innovation, and innovation breeds efficiency. And what we eventually see is an increase in productivity as well as economic activities at large.
So what are those possible risks to this growth?
Yeah, so there are several of them, one of which includes political instability. So generally, compared to where we were in 2023, you could see that the heightened instability has reduced. But something that is not often really mentioned today is economic policy uncertainty and geopolitical risk. This has a way of dampening some of the outlooks to capital importation in Nigeria. Also, I'd also like to mention the weak security issues that Nigeria is currently facing, particularly in the northern part of the country and some aspects in the southern part of the country. So, security, if insecurity heightens, then you are telling your potential investors that you cannot guide against, they are not sure of having their investment secured in the country. So one of the things we need to look at as an economy is to increase the security apparatus to ensure that to guide against some of these risks. Finally, something I'd like to mention here again is as regards the inflation numbers of the country. Again, because inflation numbers is quite high, so what that means is that for foreign investors coming in, they may have to think that at 34.6, this means that household consumption would reduce because, again, most Nigerians are poor, and at a GDP per capita of about 2,460 in 2023, you are compared to before pandemic where we had over 2,500. You know that poor households are like income in these households are reducing. So if income is reducing, again, what that means is that they might not have the demand to. They might not have the purchasing power to buy some of these items. So those are some of the risks and many others, but I would like to stop here.
All right, but Olajide, you know, that kind of counters your opening optimism when you said that at least we've seen improvement in our FDIs, and you do see that the benefits of the reforms, the economic reforms, we'll see more of it in this year. But with all of these risks, how do we place that expectation of the benefits of the reforms?
Let me also mention that for every opportunity that we see in an economy, there are always the downside risks to it. So, so out of every policy that we've seen or every reform that we've seen in the Nigerian economy, we should expect that there are always some downside risk. So the risk affecting Nigerian economy is nothing new. It's something that has been ongoing for a while now. And so the security situation, the economic policy uncertainty, which sometimes I would say it's not just limited to Nigeria. It's something that you can call, like even some parts of Eastern Europe, parts of the world, Latin America, are also witnessing some of these issues. So again, I wouldn't want to be to gracefully say that some of these policies are automatically going to feed into FDI and increase FDI to new heights or to new levels. But again, if the government can guide against some of these risks and provide the enabling environment for private sector to thrive, then you expect that FDI should come in. For instance, something that has not often been mentioned when it comes to the Nigerian economy is the weak links in the transportation sector, logistics, as well as the transportation sector and logistics and the supply chain. So, I mean, but again, we can see that there are ongoing reforms on the railway systems and on the roads. And this can also, you know, when foreign investors see some of these kind of developments going in, they could as well think about, okay, so why don't we come in and look at how to set up our investments in the country to potentially get more benefits from some of the investments going on. Again, something else that I know it will take a while before the country is able to get out of that is the energy supply, or let's say the power and electricity system. But again, what we currently have is most foreign investors in the Nigerian economy, even domestic investors, don't rely so much on the government electricity. They also source for alternative sources of electricity. So again, while some of these are issues in the current economy, you could still somehow say that, yes, they may want to discourage investment, but again, investors have to think about it critically and check, it's about what is the opportunity cost for them coming into the Nigerian economy, or maybe taking their investments elsewhere. If the opportunity cost for them shows that staying in coming into the Nigerian economy is their best bet, despite all of this, we said they are going to take that bet and they are going to come into the Nigerian economy. So something we could see from portfolio investment is, despite some of these downside risks, you could see that NAKNB, the parent company of Nigerian Breweries, in Q3 recently increased its share capital by about 342 billion naira in the Nigerian Stock Exchange. So in the Nigerian Breweries rather. So, and also you could see Tolerant Group trying to take over this Singaporean company trying to take over Diageo company to acquire Diageo, the shares of Diageo in the Nigerian economy. So you could see that, yes, so there are potential. So when other foreign investors see some of these ongoing information or some of these ongoing happenings, then they could also look at it as a potential limelight for them to also come into the Nigerian economy to boost foreign capital in the Nigerian economy, bearing in mind that most of these issues are not just limited to Nigeria. So if we take a look, sometimes if we take a look at the Nigerian economy and we stay within the economy, we might say, okay, the economy may not be able to attract that much potential. But when you take a comparison of the Nigerian economy to several economies, not just in West Africa, but globally, you'll see that Nigeria has a lot of potential, particularly because of the land mass, particularly because of the population, and particularly because of the human capital that we have, which are always available in Nigeria. So those are some of the potentials that foreign investors are looking at to ensure that they bring some of their investments into the country.
Yeah, well, we do hope that even if we can, I mean, not that we shouldn't attract a lot of foreigners, but let's not lose, not as much as we had last year. We lost, you know, I think they said between 2020 and 2024, we lost more than 20 companies exiting the country. I hope we will not have that story. And if we could even have local players, you know, take the spots of those multinationals, I guess we'll be in a good place.
Yes, so something to also mention is that the reason why some of these players left Nigeria was not, the bigger ones, was not particularly because of Nigeria, but because of the global headwinds affecting global economies. COVID-19 struck the world in 2020. And if you look at some of the policies that were used to cushion some of the effects in advanced economies, most of the developing economies and EMDs like Nigeria did not have such buffers as a result. So take, for instance, a typical company in the United Kingdom, which had to shut down because of COVID-19. The government had to pay their salaries for like a year during the period of COVID and the like, but those kind of buffers were not available in Nigeria. And when you don't have the demand for your products, right? So what it means is that you're just producing, you are losing money. So the best thing for some of them was to leave the Nigerian economy. But while the COVID-19 had a more debilitating effect on advanced economies in terms of health, for Nigeria, it had a more structural effect in terms of economic activities. So because of the lower demand at the time, that led to so many of them leaving out. Again, while we speak about the COVID-19 event, we could also see the effect of the Russia-Ukraine war on the Nigerian economy, where some of the goods that are being imported from some of these destinations were affected. Prices skyrocketed, which was one of the reasons that has led to food inflation heightening in Nigeria before now. So if you look at some of these issues, you realize that they are not just typical to the Nigerian economy. So like I said, most of the issues affecting the Nigerian economy has been around even before COVID-19. Power, transport system, the logistics, electricity, they've all been before the COVID-19 happened. But something that you can speak about more recently is in terms of security and the likes. So you could also say that even with that, so many of these investors decided to stay in the Nigerian economy because they were still making a lot of money from the Nigerian economy and also improving the development of the Nigerian economy. But some of the reasons why they had to leave was the Russian war in Ukraine, which affected the supply of raw materials from some of these destinations. And even from when some of these companies decided to look at alternative places, because of those alternative countries had a higher demand for their products, then inflation would definitely, or prices would definitely rise, particularly for some of these goods. And when they rise, what will eventually happen is inflation is going to increase, which is what we've seen in the persistent increase in importation of some of the cost of raw materials that we use to produce goods in Nigeria as well. You know, Nigerian exchange rate has depreciated drastically in the last 2 years. So as well. So what it automatically means is as exchange rate keeps depreciating, what you would find is that the cost of importation would also increase. So some of these things are fed into inflation as we have as of November, which is at about 34.6%. So I would say that, yes, so some of the issues that Nigeria has been facing is not just limited to the Nigerian or the domestic economy, as it were, but some of the capital exportation has been due to, you know, their inability to attract some raw materials, the COVID-19 pandemic, and and how this has affected the Nigerian economy at large.
All right, thank you so much for that. But at least we sense optimism, and we do hope that it stays that way, you know, as we get more into the year 2025. Macroeconomist Olajide Oyadei, thank you for your perspective.
Thank you very much. Have a nice day.
It's time for the markets now. We start, of course, with Nigeria. That's where we are. After all, we see a drop at the NGX this afternoon from the positive, very green close that we had last night. 105,000, we're still retaining that, but the market has lost 0.16% at intraday. And for Johannesburg, it's positive 0.29%. Let's look at other parts of Africa now. If we could, the other parts of Africa, Egypt is closed on Friday, so it's closed down at 1.15%, 29,444.65, while for Nairobi, it's closed from Thursday positive, and they've been looking good, just climbing slow but steady on their all-share index, so 128.97 now. Coming back to Nigeria now, let's talk about the market that perhaps a lot of eyes are not on, but they are also very impactful. That's the unlisted market, the NASD. We do bring you the numbers. And remember, last year, 2024, Aradel moved from the small unlisted market, NASD, to the NGX. We saw a lot of investors who had been so patient, while the stock was on NASD. When they moved to NGX, we saw a lot of profit taking and all of that. But let's get to know a bit more about the NASD unlisted market this afternoon. We have Mr. Omolegbe joining us now. Good afternoon and thank you to the program. I didn't get that. Can you hear me?
I can hear you.
Okay, but your audio is not very clear. Let's hope that it will clear out as we speak. So tell us the performance in your market. A lot of people seem to ignore the NASD and everybody's looking at the NGX as the major stock market. But tell us about the performance of your market in the year 2024.
Yeah, correct. Because NGX obviously is the main market, is where all the big companies are listed. But I'm glad that investors will be ignoring the NSD at their own.
I can't make out what you're saying. I don't know where the issue is, but I'll just give you some minutes. Perhaps you log out and log back in and all of that while I go to the other market, and then we'll come back to you, and hopefully by then we can have, a fruitful conversation. So we hope to have Mr. Latunde Amolegbe soon back, with better audio. Now let's go to other markets for this afternoon. I believe that will be the Middle East, where we do know that two of the markets are closed on Fridays. Dubai and Abu Dhabi are open, so we have intraday from Dubai. Positive there, 0.04% at 5,231.27. Abu Dhabi also positive, much better, 0.35% right there, 9,496.16. In other parts where the markets are closed on Friday, the Tada War closed positive 0.07% at 12,097.75. But Qatar also closed in the red, down 0.14% at 10,441.53. Now let's go to the Asian market. I believe, or is it the U.S.? The U.S. market was closed yesterday. It's honor of, Mr. Jimmy Carter, who was buried yesterday. A lot of festivals and our eyes were there, so the markets were closed for the United States. So at the Asian market, we see that some numbers had been released. The Asia Pacific market mostly in the red. Investors are assessing the November pay and household spending from Japan. And real household spending in Japan was down 0.4% year on year in November. It's a softer fall compared to 0.6 that was expected, and also less than what was recorded in October. In October, it was more than 1%. But even with that, we did see that the market reacted negatively. The average real income per household stood at 514,409 yen. That's about $3,200 for November, there was a gain of 0.7% year on year. Separately, the People's Bank of China announced that it would suspend treasury bond purchases temporarily, and this was due to the bonds being in short supply, with the PBOC adding that it would resume bond buying depending on supply and demand in the government bonds market. So we see all of this feeding to red numbers at the Asian market. Nikkei is down 1.05% at 39,190.40. The Kospi of Korea, South Korea, is down also 0.24%, 2,550.7. The Hang Seng Index almost 1% in the red. Numbers not, looking good. This happened in its final hour. Initially, it had some gains. Talking about the Hang Seng Index, it had some gains at the beginning, but I mean, in between, a whole lot that happened. We see almost 1% down right there. And then the Shanghai is even more than 1%, 3,168 after losing 1.33%. And then also for India, we know that India too has been doing a lot of heavy movement downwards, unfortunately. So 23,431.50 after losing 0.40% from its trade. All right, let's see if we can have Mr. Amolegbe join us now with a better audio. Hello, Mr. Amolegbe. Can you hear me?
Yes, I can hear you, Winnie.
Better, yeah, this is much better. Thank God for that. So I was asking how operations and your performance was in 2024, even though a lot of people kind of ignore, the unlisted market, but I know that a lot of activities happening there.
Yes, you nailed this on the head. The fact of the matter is that more attention is paid to the NGX, rightly so, because it's the bigger market. It is where most of the bigger companies are listed, but for the discerning investors that were able to pay attention to the NASD market, they've done pretty well. And the fact is that they've probably done just a little bit better than what they would have done on average than the NGX. NASD returned well over 200% for 2024, while the NGX returned about 37%. But you have to take cognizance of the averaging out, given that the NGX is a bigger market. But the NASD has done pretty well. My expectation is that as the year goes by, we will see more listings and more companies coming to that market. And hopefully, investors' interest will also shift towards that market so that more people will be able to get the benefit. More investors will be able to get the benefit of that particular market.
Yeah, I think you mentioned that. That's the listing, because perhaps one of the reasons why you don't, investors in Aradel, they cashed out. That was so obvious, last year. And I wonder which one is going to be, the major one for this year. But it does seem like investors do not have a lot of options if they look the way of the unlisted market, and they do not know how long they would have to wait, to recoup, apart from their investments and all of that. So perhaps the NASD needs to work harder to get more listing.
Yes, and I agree, because the truth is that as more companies are getting delisted from the NGX, there's an opportunity for some of those stocks, those same stocks, to be listed on the NGX and traded. We have regulation in the books that says that public companies with more than 50 shareholders, should not actually be trading their shares on a private basis. Their shares is supposed to be traded on a recognized exchange. So if such companies exist and they do not want to be listed on the NGX, for instance, automatically those companies are supposed to go to NASD and other over-the-counter markets. But we've not seen that. I think that with better advocacy and more pressure on the side of the regulators, we will see more companies come to the NASD OTC market, and that hopefully will drive investors' interest towards that market. If few of that had happened, the likes of Mobil Oil used to be listed in NGX. It is now on the NASD market. I suspect that some of the other companies that have found their way out of the NGX could very well end up on the NASD. But clearly, there's more to be done regarding advocacy and regarding the pressure from the regulators to get some of these companies, some of them relatively large, but for some reason will prefer to have a close shareholding structure to come and trade their shares on the OTC market rather than continue to trade on a private basis.
So, and it does seem like perhaps one advantage that listings can be a huge attracted is the requirements. Even during this bank recap, we've heard of the process and procedures that companies would have to go through to qualify and all of that. And I guess the requirement is less demanding when it comes to the unlisted market.
Absolutely. That is the reason why it is an unlisted market. Limited disclosure requirements, limited need to have a comprehensive information dissemination apparatus, if you will. And of course, the cost of listing is also significantly lower. And that really should be an incentive for companies to want to continue to list. But then, like everything within our economy, we still need the government to continue to give encouragement for companies to want to come and list. One of the challenges we're having regarding keeping track of data within our economy is that lots of things are done, lots of activities that should typically be carried out in a public manner are carried out on a private basis. People are trading securities, on a private basis rather than, for those securities to be traded on a public basis. So capturing the data and really knowing what exactly is going on is very difficult, which is the reason why I keep saying that engagement by the regulators will go a long way to encourage these transactions to come up, and happen on recognized platforms as different from continue to happen under the radar, if you will.
Yeah, and maybe on the other hand, some investors will need assurances, that this is a good place to put my money.
Well, the only assurance that I believe investors need is the sort of returns that they can gain from whatever platform they are trading on. I'd mentioned that the NASD did well over 200% last year. As a matter of fact, if you select a basket, a much smaller basket from the composite index itself, you could say that we had a smaller basket that is called the pension index that actually delivered 400%. Investors put their money in the markets in order to make returns. So if you can make such a return in the market, then you might not be doing yourself a favor by ignoring such a market. Inflation well over 30-something% in the economy. So you need your investment to deliver returns that is well above inflation. And clearly, if you are able to put your money in investments that gives you 200%, 300%, then you are doing well above inflation. So you are doing pretty well. So I will expect that discerning investors continue to take a look at what is happening in that particular market. Not to say that the interest in the NGX should not continue. I still feel that the NGX itself still has some significant way to run, but it also helps to have a portfolio that is well diversified. You want to have a portfolio that represents, a whole gamut of different aspects of the economy, and to achieve that, while you are putting money in the organized market, you also want to look at the unlisted markets in order to increase your diversification and thereby bringing down your risk.
All right, Mr. Abonlegbe, finally now, what stocks would you say investors could look at, for this year on the unlisted market?
Well, I will say that, the focus has been on the oil and gas companies and the banking stocks, particularly on the NGX. There are a few stocks, listed in on the NASD, which I feel that are worth considering for investors. I've mentioned 11 PLC. 11 PLC is former mobile oil. We have seen the performance of stocks that are around the UBA group. We've seen the performance of United Capital on the NGX, the performance of African Prudential. My expectation is that Afriland Properties, which is listed on the NASD, should follow that target of the performance of all the other stocks that are around the UBA group. So Afriland Properties has done quite well. To the best of my knowledge, I think that stock probably opened the year last year at 2 naira. I believe it's selling well over 15 naira now. So that's significant gain right there. And I believe that you still have some space to run. And there are a few other stocks here and there which investors should please consider and see whether they want to put money in.
Right, Managing Director, Access Stephen Asset Management, Mr. Latunde Omongbe. Thank you for the tips. I'm sure it will benefit some investors, who are watching right there. Now, from the Nigerian markets, we head to Berlin, where entrapped in an economic crisis with virtually no growth, Germany is seeing itself or finds itself heading for a snap election. That's supposed to happen at the end of February. And these days, the major parties are starting their campaigns, and the country's weak economy is, of course, at the front burner of that. Lars joins us now to tell us more about this. Hi, Lars.
Thanks for having me, Ini. Well, for now, I'm just glad that the weak economy is indeed the major topic for all the parties and that they're not wasting time on ideological battlefields, at least for now. In fact, the major parties are pretty much in agreement that German companies have to invest more to really fire up the economy again. So the question is, how do you get the corporate sector to invest more, especially in uncertain times? Now, there seem to be two ideas out there right now. The Social Democrats, that is the party led by still governing Chancellor Olaf Scholz, says that they want to pay out an investment subsidy to companies, obviously making it cheaper for them to invest. The idea seems to be that 10% of any investment in new plants or machinery would be paid by the government through a tax refund. The Green Party, by the way, they're the Social Democrats' coalition partner, is on the same page here. But then there's the Christian Democrats currently leading in the polls, and they are suggesting to generally lower corporate taxes. Currently, they stand at around 30%, and that is, in fact, quite a bit higher than in other EU countries, and they want to bring them down to a maximum of 25%.
All right, Lars. So these two suggestions seem reasonable, but what are the pros and cons of each?
Well, let's start with that subsidy on investments. There's definitely one big plus for this option. It would be a very targeted approach. Money would flow only and specifically when a company is in fact investing, and thus this form of subsidy has a very direct effect. The problem, such a program could be quite difficult to administer. It could lead to a hell of bureaucracy, and some say, well, it might in fact subsidize investments that had already been planned anyway, which means we're throwing out money mostly to powerful companies, money that is obviously they're not spent on other issues, including, for example, social programs. But then we have that general tax cut, and the good thing about that is obviously that it leaves companies with more money, and some of that might in fact be invested, but it does not guarantee that. So as much as this option would be a lot easier to administer, it would not really tackle the issue with much precision. It would lead to less income for the government while not guaranteeing new growth at all.
All right, interesting. But what investors, what are they doing today?
Well, it seems to be a very slow day so far in Frankfurt. Not much movement in the DAX. There's simply a lack of news really out there. Analysts parsing the market are saying that all that's really interesting on this Friday really comes out of the US, where markets are open again after yesterday's day off. And there is a flurry of data coming out. But that, of course, is going to be quite a bit later today. One story I found interesting today, and that we should probably keep an eye on: Bitcoin is under pressure. A court in the US has given green light to the US government to sell almost 70,000 Bitcoin that were seized in an internet crime bust. Now, if those were sold, that would be a lot of Bitcoin supply coming into the market, and it could lead to a correction in this most important cryptocurrency. That obviously is an asset the incoming president there seems to appreciate. So this is a political story that could have real consequences today for crypto investors.
Obviously, Lars. Thank you so much.
Thank you, Ini.
All right, now I will certainly follow up with that crypto. The U.S. selling, or in a bid to sell some Bitcoin. We'll talk about that later on our crypto segment. But now let's head to Africa, where Ghana has emerged as the second most indebted country globally under the International Monetary Fund's Concessional Lending and Debt Relief Trust, with an outstanding exposure of 2.242 billion special drawing rights, representing 17% of total borrowing from the fund. This was revealed in the IMF's latest financial statement and quarterly reports ending October 31, 2024. The concessional lending facility provided under the Poverty Reduction and Growth Trust offers low-interest loans to low-income countries to support economic recovery and development over a 1 to 3 year period. Ethiopia topped the list of concessional lending debtors with an outstanding amount of 2.256 billion SDR, that's slightly higher than Ghana and Zambia, followed in the third place with 1.272 billion SDR in IMF obligation. Kenya and Ivory Coast ranked 4th and 5th, respectively, while other countries accounted for the remaining 44% of SDR borrowings. I must say that President Mahama has a lot on his hands, and he had hinted that he was going to reduce some of those taxes that had been very controversial in the last administration. But with these numbers, I wonder how he would balance that out. Now we go to Morocco, where Morocco's tax amnesty operation has ripped 12.4 billion USD billion, and that's about 127 billion dirhams. So it's $12.4 billion in the United States dollars, but that's about 127 billion dirhams, surpassing initial forecast. Minister Delegate for Relations with Parliament and Government spokesperson Mustafa Bahatas announced this. This operation, which aims to encourage taxpayers to voluntarily regularize the situation of their undeclared taxable profits and incomes before January, has achieved exceptional results. And Mr. Bahatas notes that this during a press briefing following cabinet meeting. The declared value, which is 127 dirhams, which helped replenish the state treasury by 6 billion dirhams, is poised to strongly contribute to financing the national economy and provide it with a significant boost. And Zimbabwe's Sustainable Energy Plan has received a boost after the government scrapped value-added tax, that's VAT, on liquefied petroleum gas, LPG, translating to a 10% reduction in the price of the commodity. The reduction in LPG prices is expected to ease the financial burden on consumers who rely on it for cooking, heating, and other essential activities. The decision follows weeks of advocacy from consumer groups and industry stakeholders urging the government to intervene and surging energy costs. The government has assured citizens that it is working closely with the suppliers to ensure smooth distribution and avoid potential shortages. Additional measures to support renewable energy initiatives and reduce reliance on fossil fuels are reportedly in the pipeline, according to the government. And talking about incentives, South Africa is now moving to incentivize local production of electric vehicles by offering some tax incentives for manufacturers. The tax incentive comes into effect in 2026 and will enable manufacturers to deduct 150% of the cost of buildings and equipment used primarily for producing electric and hydrogen-powered vehicles. Charge says that while this measure is expected to boost local manufacturing, the South African government should address the barriers that hinder EV adoption overall, including imports, and promotes the development of charging infrastructure. The South African government says it has signed several MOUs with Chinese electric vehicle manufacturers to look into manufacturing EVs in the country. And they hope that the tax incentives would unlock a new manufacturing industry in the country where 99% of vehicles are made there and still ICE vehicles. Let's head to the crypto space now. And of course, one of the issues we'll talk about will be that sale of Bitcoin recovered in the United States. But before we get there, let's look at the price. Bitcoin is up this afternoon, 1.72%, 95,117.35. Ethereum follows suit, but just 0.3% green gain on it. XRP, Solana, AVAX, and XNM, and some of those coins that, well, we have been advised that we could look out for this year. But we see BNB, TRX, USSDS, and some of, we saw a bit of recovery here. I think, was it yesterday? No, I wasn't here yesterday. So 2 days ago, we had some of the stable coins in the green and others in the red. So we see a bit of reversal right here. But let's talk to Rume Ofe now and find out his thoughts. We have some headlines, though, but I think I'll take that towards the end. Hi, Rume. I think I'm just so anxious to talk about this seized Bitcoin that could be sold in the United States. What do you know about this, and what impacts can we expect it to have on investor sentiment?
All right. Happy New Year to you, Ini. Thank you very much. Yeah. So what actually is going on with the Bitcoin that are going to be sold as a result of the fact that these are coins that have been seized by the U.S. authorities before now from some fraudulent activities that have happened before. And right about now, they are going to sell. Selling them also is a way to be able to raise money for the government. But again, because of the fact that Bitcoin is digital gold and a lot of demand is on Bitcoin, considering what it solved, the problem it solved, and the value attached to it, I really don't think that it make a lot of sense to be selling Bitcoin now, most especially with the fact that Joe Biden's administration is running down. So most likely it's making some sense that he's selling because Donald Trump is coming, because Donald Trump is a crypto-friendly president. So some of these things are ways people are going to most likely think about this, but it's also not good for the industry because huge amount of the money, about $6.8 billion, is going to shake the entire industry right about now in terms of liquidity leaving. We're already seeing some signs where some of the ETFs are actually having to see some outflows right about now. But the truth is, on the long term, something is going to make sense. 20th of January is just very close.
Yeah, it's close, and it seems a lot of decisions are hovering around that. I think some conversations around, some people are waiting for Trump to get in before the ban, and I just wonder how long the Trump effect is going to be in the markets.
Yeah, so if you ask me again, as those that are more very knowledgeable in the industry right about now, I think I can also say that the Trump narrative is being exhausted at some point, because we've seen some drawdowns in the entire market right about now. It's been exhausted reasonably, but 20th of January could be a buy the news, sell the event, sell the news event. I beg your pardon. So we could see some people selling after some profit has been amassed a few times and time now. Uh, Starting from when he was elected as president till now, we might see some profit taking, and that could also see some downside. And at the end of the day, seeing some range movement at some point. So, but we don't expect the market to move all up. People are going to take profit, so expect the very best in the long term. But in short term, no one can really give the exact way the market is going to move in the short term possible.
All right, Rume, thank you so much for your thoughts this afternoon, and enjoy the weekend.
Thank you very much, Ini.
All right, just before we leave now, there's been a list of some cryptos that Mr. Anthony Sakramucci is saying that you could look out for. He's an American financier, formerly White House Director of Communications. So perhaps you want to take your pick of cryptos to look out for this year, 2025. Obviously not a financial advice. It's up to you. Ethereum is there, following Bitcoin's green, Solana, Polkadot, Avalanche, Sui, and we saw this in the green this afternoon. Investing strategy. I think we have about 9 of them. We could have the other page of the cryptos, crypto peak from Mr. Anthony. All right, I think there are about 9 of them, but well, it's up to you. Make up your mind what you want to do with your funds this year. Still early in the year, a good time perhaps to check your investing strategy. There you have it. And know whether you're going to be a billionaire in dollars or in euro at the end of the year. That's the much you can take on Business Incorporated. Thank you so much for being on this journey with us from Monday up to today. We promise to start again next week and make it better than it was this week. So, John Mekwa, have a great weekend, but remember to always stay informed. You need to stay on Business Morning and Business Incorporated on our YouTube channel. That's the place to be. See you later.